Hi everyone, welcome to our webinar on life insurance. I'm Megan and I'd like to introduce you to Russell, the CEO of Life Insurance Direct. Russell's here today to share his insights on making informed decisions about protecting your financial future.
Fantastic. Well, thanks, Megan, for the intro, and looking forward to presenting this afternoon, and welcome to anybody else on the call.
All right, so to get started, I'll walk you through what we have planned for today. So we'll be exploring why life insurance is so important, review the various types of coverage available. We'll be discussing key benefits and what to look at when choosing the right policy for you. We'll cover funding your policy and get some common questions out of the way as well.
Fantastic. Thanks, Megan. Just before we kick off, we just need to run through a general advice warning. So the information that we're going to be covering off today is general in nature, and it doesn't take into account your personal circumstances, your financial situation, or your specific needs. You should obtain advice before you act on this information or make any decision about your personal circumstances or your insurance needs. So it's going to be general. It's not going to be talking about any specific circumstances, but looking forward to kicking this off and going through this topic on life insurance.
Thanks, Russell. So firstly, I think we should just cover off why life insurance matters. Why is it important?
Yeah, well, life insurance is, really a critical type of policy or a product that really helps you manage your risk, right? The key reasons Australians take out a life insurance policy or consider life insurance is really about financially protecting themselves if their loved one passes away, but also, if they can no longer work due to an illness or injury. So life insurance is quite a broad umbrella, and there's a couple of different product types underneath that umbrella that we'll cover off shortly. But typically speaking, those are the key areas and why Australian families look to consider life insurance as part of their family protection and their wealth protection.
Yeah, and I think there are quite a few common misconceptions around life insurance. Do you want to cover some of those off for us? Like life insurance is too expensive, I don't need it because I'm healthy, or I don't know, people might also think they don't need life insurance because they don't have kids yet.
Totally. Great questions. I think the reality is that life is full of uncertainties. So I think the thing that you really want to be thinking about is actually taking out insurance or considering insurance before you need it. So it's really about looking ahead and down the future and going, okay, hey, I'm at this point in my life starting a family, or considering getting married or something along those lines. That's when you want to start potentially having these discussions and thoughts, because ultimately what you want to do is you want to take and secure that insurance before you actually need it, because if you can imagine, if you've now had a medical condition or you've actually gotten a claimable event, the insurer is not going to want to insure you at that point. So you actually need to be on the forefront of it. And the other point as well is that typically speaking, the healthiest you'll ever be is right now, or the youngest you'll ever be, right? Which is in a current state. Unfortunately, we can't go back in time. So typically speaking, that'll also help with that affordability. So typically, the younger you are, the more affordable the premiums are. However, each person's circumstance is slightly different, but typically speaking, it's best to consider it earlier on in your life versus later on, where you might not be able to secure cover because you've had a medical condition.
Yeah, thanks, Russell. And you mentioned that we were going to cover off the types of cover. Do you want to talk us through some of the different types of life insurance that are available?
Yeah, fantastic. So when we talk about life insurance, quite a big umbrella, and there's a couple of specific policies or products underneath that, or different types of cover. So it really depends when you are starting on your life insurance journey, or wanting to protect your family for the first time, yourself or your family for the first time. Really want to break down what you want to protect yourself against. The first one is death and terminal illness, which comes under the name life insurance. So if you want to protect that loved one against them passing away unexpectedly or being diagnosed with a terminal illness, that's normally being addressed through a type of cover called life insurance. Okay, so that's going to be, it could be the father, the mum, the dad, the wife of the family. Typically speaking, it's going to be those breadwinners and/or both parents potentially when they're looking to protect their family. The other one is looking at total and permanent disablement cover. Now that there is really a policy that's going to pay you out a lump sum of money should you become totally and permanently disabled. Okay. Now there are a couple of different variations of that total and permanent disablement cover, but typically speaking, it's going to protect you against a sickness or an accident that's going to make you totally and permanently disabled. So either in your own occupation or any occupation suited to you by education, training, or experience. So there are a couple of other types of PPD cover, but those are the two main ones that you'll find out there. So that's that lump sum of cover, and that's really about those permanent disablements. The next one is trauma insurance. So trauma insurance also pays out a lump sum of money, and the lump sum of money here is again going to be paid out when you meet the definition of a defined traumatic condition in the product disclosure statement. Typically speaking, you're looking at your cancers, stroke, heart attack, heart disease. They make a big chunk of the claims under a trauma insurance policy. But typically speaking, you're looking at about 30 to 40 conditions being covered in a trauma insurance policy. Some of those plus policies might extend the number of conditions to another 10 to 15 conditions. But it's really about giving you funding and giving you money so that you can then either seek, the best treatment to, hopefully recover from your critical illness, put some buffer into your financial obligations, also help out. Maybe you want the wife to be, stop working for 6 months, or you may want to also stop working because you don't have, you want to focus on your recovery. So it really helps with that financial buffer to help you potentially fight the disease and the traumatic events that you've incurred. The other one is income protection. Income protection is a policy that pays you, typically speaking, around 70 up to 70% of your monthly salary. And that's going to cover you for any sicknesses or accidents that keep you off work for longer than your waiting period. Okay, so that monthly benefit there is very much, supplement to your ongoing expenses. So what it's designed for is that if you've had that sickness or an accident and you can't go to work for that that waiting period, it's there to help cover those school fees, the household costs, all those mortgage repayments, all those types of costs that you will have running a family and/or your own. If you're single, it's about looking to ensure that you've got enough funds to cover all those circumstances.
All right, yeah, that's great. I think that's very interesting. So you've got 4 types of cover to choose from. What are the benefits of having a life insurance policy?
Yeah, well, I think here again, it's if you look at a life insurance specifically, if we just drill into that one cover type, I think it's really about the financial support for your loved ones, right? It gives you peace of mind that if something does happen to you, happens to the family, the the husband or the wife, or the person that is responsible for the financial support of the family unit or the loved ones, it really gives you peace of mind knowing that they are going to be looked after, right? So we can't bring that person back, unfortunately, but it's going to provide that financial security to your loved ones so they can continue to live their life in the best way possible, right? So some of the key things that we see clients use this money for, it's really about, paying down those mortgages, right? So your family home, paying off that mortgage. It's about making sure you've got funds available to then, cover the school fees for the next, 10, 15, 20 years, depending on how long it's going to take for your kids to finish school and or university, for example. The other thing that you want to be covering off is, any ongoing living costs. So making sure you've got enough funds so that they can literally stay in that community, stay in that school area, stay in that community, stay in that home, because they're going to need all that support that they can to continue on after they've just, lost their loved one, whether it's a father or a mother. So absolutely critical one to consider for anybody who's got dependents relying on them. The other thing that we can also find with life insurance policies, there are a number of other additional benefits that people do take out policies for. And that's another one that's, where you've got somebody who might be close to retirement or in their senior years, and they'll often use the life insurance policy to fund their funeral expenses. So they might even have reduced their cover right down. And a lot of the policies include a funeral advancement benefit. So a lot of people don't know that. So when you do have a life insurance policy and you're concerned about those funeral costs, most of the policies, if you're paying for them personally, do actually have a funeral advancement benefit built into them. If it's funded through super, then that is typically not the case. But this is a great built-in benefit that allows you to address your immediate concerns. You've just passed away. You're concerned about how they're going to be able to afford that funeral. You can contact the insurance company, fill in the relevant paperwork, and that can go ahead and fund that funeral for that family member. And then the rest gets paid once the full claims process is complete. Some other built-in benefits that can be beneficial to other people going through different life stages is, some of the insurers also provide free child cover. So any of your children over the age of 2 and under a certain cutoff age, depending again on the insurer, normally around 16 or 17, will pay a $10,000 benefit if, unfortunately, your child was to pass away or is diagnosed with a critical illness as defined in their PDS. So that's there is, a nice to have, not something we ever want to think about, but a benefit to have. So obviously it's going to be an extreme traumatic, situation for the family, but here again, they may need funding. So here again, that is a built-in benefit that can be of value. The other one is accidental injury benefits is quite a common one when it comes to tradies who might not want the full total and permanent disablement cover. That's a benefit here again where you will get up to a certain lump sum worth of money if you lose the use of your limbs. And here again, that's a kind of a nice to have if you haven't got the full total and permanent disablement cover. And we're also starting to see the emergence of, and have matured a lot now, I would also say, around some of the healthy life discounts. So we're starting to see more insurers engage in, I suppose, that proactive management of keeping that life insured more healthy. So you're starting to see policies like the Vitality Health and Wellness Program attached to an AIA policy, for example, which does provide an incentive discount that kind of flexes based on your vitality status each year. So that's one thing to also have a look at if that fits into your profile. And then others are just offering better rates if you are within a certain BMI, and then others have similar kind of metrics that they work towards around offering different discounts. So another thing to have a look at really helps with that affordability given the current climate.
Yeah, definitely. I think there really are lots of benefits to having a life insurance policy. So do you want to take us through some of your options when it comes to paying for your life cover?
Yeah, no, will do. And I think it's a really good question, right? So, how do we afford it, right? So we know, typically speaking, it's going to cost us less the younger we are. And we all have, tight budgets. Here in Australia, price of and cost of living is definitely going up. So there's a couple of different options. The one option is to pay for the policy yourself, directly using your bank account or credit card. There's no additional fee using credit cards, but basically paying for it yourself. And the other option is to fund it through your super fund. Okay, so through your super fund is a way that you can use that superannuation money to fund your life insurance policy. So to set that up, you just ask your super fund to roll over those monies, once a year to fund that policy. Alternatively, you could even contact your super fund directly, and they might also offer a life insurance policy. So those are the two options: either paying for it personally or using your super fund. The advantage of using your super fund is it's not going to impact your daily cash flow. However, the downside is that it will erode at your future retirement balance or your future retirement savings. And in order for a payout to be made, you also need to meet the policy terms and conditions as well as an SIS condition of release. So as far as when it comes to life insurance, they are quite aligned with the death and terminal illness. They generally are quite well aligned, but just something to be mindful of. There is that, as well as depending, you do have some limitations on who you can nominate as a beneficiary if it's through super, because if you don't nominate someone who's a financial dependent, there can be tax implications. So something to also consider. But when you're personally owning it and personally funding it, you've got a lot more flexibility on who you can nominate as your beneficiary.
All right, great. And earlier we spoke about some of the common misconceptions that people have around life insurance. One of those was, I'm too young to have a life insurance policy. Could you take us through the best age to take on a life insurance policy? When should you be thinking about life insurance?
Yeah, well, I think it really depends on your unique journey that you're going on as an individual or as a family. But typically speaking, this is where we see people often take out life insurance specifically. I'm not talking about the other cover types, but life insurance. So I think getting married is definitely a key one. Because typically speaking, there's been those discussions before you get married with most people going, hey, are we going to have kids or not? Maybe not to cover that conversation afterwards, but typically speaking, that's when that conversation starts. Other one is having a child for the very first time, amazing time of your life. Another key moment when people are considering, whether it's the first child, second, third child, etc. That's when they're looking at reviewing and/or increasing their cover, because here again, you're going to be that person's going to be financially dependent on you for a number of years, up to age 18, 20, 21 plus these days. So those are some of those key times. Another one is buying a house. So as you can imagine, here in Australia, we've got a lot of dual income families. Costs of housing is going up and up and up. So, if something did happen to the breadwinner and or, their partner and or if both family members are working or both the parents are working, really important to ensure that, if something does happen to one of them, we can get that mortgage paid off or a big chunk of it paid off, to really then help support the other family member who might be remaining and or, the kids, so they can remain in that house. So buying a house is another big one. Another one is a change in circumstances. So quite often people will have a change in circumstance. So that could be, getting a new job. It could be maybe working in a more riskier occupation or something like that. So that's quite often when we'll start to see that change in circumstance. So you might be, moving to Australia for the very first time. You might have been living in another country. That's another time where people are looking at life insurance. You could be, getting divorced. So, here again, you might need to rejig and relook at your insurances. So really important. And here again, you could also be downsizing, where you could be going, okay, hey, that policy served me well for that period of time. I might need to reduce that, and or, shop around to see if you can save some money if, your premiums are getting a bit too high. Another time that a lot of people will look to review their life insurance is when they're setting up a self-managed super fund. So as part of a trustee's obligations, they need to review their members' life insurance needs. So quite often that'll also be another time where those the trustees will go ahead and review their members' life insurance requirements, and that's a quite a common one as well. Downsizing and retiring, here again, quite often once the house is paid off, getting closer to retirement, quite often we're now looking to reduce cover, just to make sure that we've got enough to cover, any of those funeral expenses and or, help the grandkids out or anything like that we wanted to do. So, that's a time as well. And you'll often find that just because you're downsizing and retiring doesn't mean you're always reducing cover. So as we know, mortgages are getting extended, quite dramatically with the cost of housing. So sometimes we also see where other life insurance policies might have expired and they're actually contacting us to go, hey, I still got a bit of a mortgage. I still want to go ahead and make sure I take out some additional cover, and or if that policies cease, take out some cover to ensure that they've got some funds to, extinguish that mortgage, and or leave some money behind for the grandkids.
All right, thanks, Russell. While we were talking, a couple of questions came through from the viewers here. I'll just pick one. So how much life insurance should I have in place?
Yeah, great question. I think, when it comes to the ideal amount of life insurance, I suppose it's difficult to put an exact number on it, but because everyone's circumstance is different, right? But typically speaking, what you want to be doing is you want to be thinking about, okay, if something happened to me right now, this minute, what would need to be paid for, right? So typically speaking, we're going to be looking at mortgages. So what are my total mortgages? How much do I got outstanding today? What are my total debts? Might be car debts or other things going on. What do I need to fund for my kids? Education, schooling, all the costs of that, not only the physical costs of the educational costs, but it's also the living costs, of the children as they get to age 18, 20, etc. So you want to really, so that's kind of the first concept that we want to go ahead. We want to go kind of add up all those obligations, add up all those things. Then in the minus column, we almost want to take out, okay, so do we have any other insurance anywhere? Do we have some other life insurance somewhere else that we might be able to use? Or, could I use some of my superannuation money to reduce that down? Or do I want to use some of my super to reduce this down, if I am, if I do pass away, your family, if they are nominated as the beneficiaries, will then mean that you need less level of cover to do that, or you might have liquid cash that you'll go, okay, hey, I'm happy for them to go ahead and use this fund. So once you kind of find out that equilibrium of where you're at, then you want to think about, budgets and how does that fit into your budget. So, whether you want $1 million worth of cover, 500,000, 1.5 million, it's really going to depend on your circumstances. But, it's really quick and easy to get some pricing, get an indication of what that looks like. And then that's really going to put you on the right track around, the level of cover that you might want to consider.
Thank you. And here's another question that's come through. What happens if I stop paying my premiums?
Yeah, great question. So life insurance in Australia works very much like car insurance, I suppose is the best way to describe it. And the reason for that is that it doesn't have an investment component. So they're typically just term life policies. There were some very old style policies that are no longer for sale on the market pre the superannuation era. But basically, it works that, while you're paying, you're covered. If you stop paying, you're no longer covered. So there's no investment component anymore. It's just a pure insurance contract now, so a pure term contract.
All right, thanks. And this viewer wants to know, is life insurance expensive?
Yeah, great question. We get this question every day. And I think with regards to life insurance, it really depends on what you are wanting to be covered for. So each level of cover does adjust your premium. But typically speaking, if you're a 30-year-old looking for $1 million worth of life insurance, you could be expecting around that, $35 to $40 mark, something around there. If you're 45, looking for that $1 million worth of cover again, you could be around that, $45 to $60 mark, here again, depending on your circumstance. And if you're, let's say 55-year-old, you might be looking at something around $150 to $175. So it really depends on which insurer you're looking at. But as you can see, that is a fairly, $1 million worth of cover, depending on the person's circumstance. So here again, it's really about, firstly, understanding that level and type, firstly, the level and the type of cover that you want to look at. And in that particular scenario, I'm just talking about non-smokers, right? And also that is for a male. Those numbers that I was quoting, females are typically going to be cheaper and lower premiums than that. However, smokers would be higher. So it's really about establishing that level of cover first, and then you can start working through the budget and then adjusting that level of cover if you need to fit into the budget.
Great, that was really insightful. Thanks, Russell. Next question on my list here is, does life insurance cover pre-existing conditions? Yeah,
great question. So it's a really interesting question, right? So the key thing here is typically no, it doesn't cover pre-existing conditions, but there is a caveat to that. If you have a pre-existing condition and you have fully disclosed that to your insurer at the time you took out the policy, right? And if they go ahead and they say, yeah, no problem, thanks very much, you disclosed your XYZ condition to me, and they review that condition and they're happy to insure you and not put an exclusion on that condition, then you would be fully covered. Okay, a lot of insurance policies, would put an exclusion on pre-existing conditions that are not disclosed. But here again, I would always encourage you to review the product disclosure statement and or talk to a life insurance broker or financial advisor to ask them specifically about your circumstances and how that might impact your application. So the most important thing when you are applying for a life insurance policy is disclose absolutely everything to them. You do have a legal obligation under your duty of reasonable care to disclose to the insurer everything that they ask you. However, really important for you to be, upfront and honest with them, because ultimately at the end of the day, if they do have a problem with your pre-existing condition, you would rather find out today, because then alternatively you could look at another insurer, or you just have to manage the risk if you couldn't get cover for that particular condition. So yes, great question.
Thanks. And I've got another question from a viewer here. Can I change my life insurance policy later on?
Yeah, great question. So yes, you can go ahead and change your life insurance policy with here again with a caveat. So if you want to go ahead and reduce your cover, right? So let's say I want to cancel my policy or reduce my cover. It's typically speaking not going to be an issue. So what you'll do is you just contact your broker or the insurer directly, and you can go ahead and reduce your cover. When it comes to increases, though, so increases will need further underwriting. So typically speaking, there is an application form that you'll need to go ahead and complete. And you can go ahead and then look to increase the cover. Here again, so long as they are accepting your risk profile and your occupation and your medical conditions, then they'll go ahead and increase that, so long as that it's within their risk tolerance and they're happy to do so. So those are the options that you have available. And the other one is then here again, if you're still in good health, you may also want to cancel your existing policy and then look to go and join another insurer if they might have better rates or policy features that might suit you better at the time.
Great, thank you. And I think we might just cover off one final question. Let's do, can I have multiple life insurance policies?
Yeah, another great question. So typically speaking, you can have multiple life insurance policies. However, every subsequent policy, you need to disclose to that next insurer. So let's say I have a policy with insurer A. I can go ahead and take out another policy with insurer B. However, I need to tell insurer B about the first policy, right? So it's really important that I do that, because insurance is all about indemnifying that person and bringing them back to that state that they're in prior to the event. So you don't and you can't take out multiple life insurance policy if you're over-insuring yourself, like way too much, because that indemnification concept doesn't really apply then. So it's really about you can have multiple policies so long as you're informing that insurer each and every time the subsequent provider. And it's also worthwhile with insurer A just checking that there's no exclusions in relation to multiple policies. But typically speaking, you're able to take out multiple policies on the life insurance side. When it comes to income protection, that might not be the case because they do have offset clauses, but we'll cover that off in another session.
Great, thanks, Russell. Yeah, I think you've really given us a lot to think about today. Do you have any closing remarks for our viewers?
No, thank you so much for the time. Team's here to answer any questions that you might have. We understand that, looking and navigating life insurance for the very first time can be daunting. It's not barbecue talk. So please feel free to reach out to the team anytime, and we'll hopefully make it as straightforward and clear for you as possible.
Thanks, Russell. And thanks for joining us today. If you'd like to join us for our next webinar, go ahead and subscribe to our YouTube channel or visit us on lifeinsurancedirect.com.au. Thank you.